Hey everybody, it is Saturday the 28th of September 2019. Brian Shannon speaking here. We had a down week and we were expecting a little bit of weakness coming into this week. Last Friday I mentioned that we were below the declining 5-day moving average, and we continue to be below that declining moving average. So we've looked for the potential of support, but it hasn't been found yet. The prior band of resistance, which then became support, is now back to resistance. So for this market to get back into a position where we can start to trust the upside again, I think we're going to need to see it at least above 298.50 and then to see that 5-day moving average flatten out. So we're back below not only the volume weighted average price for the month, but from the late August low as well, and that just keeps us a little bit defensive going into next week. Now on the daily time frame, we are still holding this more important level right here, and that's going to be the key for this week. If we can still stabilize in this general area, then we have the possibility that we could turn back higher. But going into Monday, again, we're kind of in the same situation we were last week, which is just a little bit defensive because we're below the declining 5-day moving average in these markets. The NASDAQ broke its near-term level of support, and that has found resistance. And you can see here the 5-day moving average acted as resistance twice. So again, we got a little sold off Friday afternoon, and maybe we see some further bounce, but the fact is we have a pattern of lower highs and lower lows here in the intermediate term, so we can't trust it yet. This is a critical level really on the daily time frame, and we can extend this trend line right here and see that it would possibly bring us down. Well, I guess we hit it. I hadn't even realized that. But this will be this week's low. Friday's low is going to be important. If we hold below these levels for another day or two, it's possible we could see a bigger decline down towards 180. The Russell 2000 is still trying to stabilize here right at the 200-day moving average and the volume weighted average price from the December low. It was in a condition at the beginning of this week where it looked like it was trying to hold on to its gains, but we were again not in a position to buy with a declining 5-day moving average. So it's still not a buy yet. I think we probably want to see it, maybe let's say the bullish scenario would look something like this in the next day or 2-3 days, something like this, and then be able to move higher. But right now, I don't see any reason to be a buyer here other than to say, I don't want to buy at a level just because it's a 200-day moving average. I want to wait for evidence the buyers are actually there. We're simply at a level of interest. The semiconductors also saw some pullback this week, and again, looking at this sheet, overall, most markets lost a little more than 1%. Those biotechs, though, again, were the worst group, well, with oil, but biotech's down close to 6%. We'll take a look at those in a moment. The 50-day moving average is still rising in the semiconductors, and we are above this prior band of resistance. So the key level that we want to see hold this week is down near 115. If we break below and hold below there, then we perhaps get a deeper pullback. But for now, it's just a more cautious tone because we have the slope of the 5-day moving average declining. Now, these biotechs got hit pretty hard. This was a scenario I'd outlined earlier in the week for subscribers, and I do this analysis of the markets every single day. If you're not familiar, go to alphatrends.net and click on the subscription options there. But we've broken below this June low, and we did it with a market that is again down 6% this week. So this is not the time to be shorting. You don't want to be shorting down after a 6% drop. You want to be shorting in anticipation as we start to see the intermediate term really start to turn lower. So don't chase this to the downside. Now, this is truly the the worst looking group right now that I follow on a regular basis. We are at a 61.8% retracement of the December low to this year's high, and this is the second time we've been in here. So a possible scenario, if we're going to see these groups continue, this biotech group continue to lose ground, would be maybe a rally up towards this level and then start to decline. And the place you would want to short would be as it starts to turn back lower, not on the way up, because maybe it keeps going up. Similar to we don't buy a dip, we buy after a dip. Financials did gain some ground on Friday, and for the week, they were really held on the best, down just 4 basis points. So these financials are holding a rising 20 and 50-day moving average. The 15-minute time frame, you can see that 5-day moving average is trying to flatten out a little bit in here. So this could be the group that provides some leadership this week. It is also holding the month-to-date volume-weighted average price, but not quite ready, but back above this 2830-ish level. I think that would, a scenario like this would really be the most bullish way of looking at that. We are, however, losing ground in important stocks like Amazon, which is closing below the volume-weighted average price from the December low and from that that 2018 peak. So you can see that volume-weighted average price from the December low as well as this peak, the stock is below. Now, it has had a rough week here, so I wouldn't short it in here, but if you're looking for a short of Amazon, the way to do it would be like this, and then to short under here. Very similar to, we've spoken about Netflix and the fact that it's in a downtrend, and this is where it definitively lost that volume-weighted average price from last year. So a lot of these stocks are in trouble, and they're continuing to show that weakness. So the message of the market is, before we head into earnings in a couple weeks, that we want to look at this market as a very cautious environment and to trade smaller size and don't chase positions in either direction. Thanks for tuning in, and have a good weekend.